Alright everyone, Cowboy Trades here, welcome back to the channel for another update on KDA. So, I'm going to be away from the channel for the next 5 days. I talked about this in my most recent video, but as I am in an active trade for Kadena at this moment in time, I wanted to make a quick update in the morning before I leave to give you an update on what I'm going to be doing with my KDA trade while I am away for the markets for the next 5 days. Now, before we do start this video, I've got a little bit of a cold, so do excuse my voice. I'm just working through this as best as I can. But let's start off on this. So, a lot of the analysis I'm looking at for KDA right now is somewhat 50-50, and this is why I'm going to be amending my trade very slightly, making it more profitable in the worst case scenario. So let's dive into this. I want to start off on the higher time frames. Now, we've been looking at these for a while. If you're a veteran, you'll know exactly what these are. These are the volume profiles, and as you can see, we talked about how quickly, excuse this chart because this chart is a little bit weird, but you can see this is kind of the area where we fell into an area of no liquidity, and we talked about what happens when you come down to volume profiles where there is not really much data traded. You really fall like an absolute knife. You fall into an area where there's volume traded, like over here. You can see this box of somewhat liquidity, and you spend a good amount of time trading in this range. Now, we've kind of falled through all of these volume profiles, and we've come down to one of the first volume profiles that has a decent cluster, and this is what this is over here, encompassed in green. There's a huge amount of previous buy orders here, a good amount of sell orders here. But nonetheless, at this moment in time, round about this 89 cent, this makes sense why we've been lollygagging at this price for some time, because this is an area where there are volume profiles. So while I am bearish, and I do think we're going to continue breaking down, especially in the higher time frames, do be a little bit cautious while we are sitting in these volume profiles. We might be here for a little while before we do come down to our 69 cent price target, which is of course our take profit for this KDA trade. So once again, just a quick update on the volume profiles. We are currently sitting in a position of strength for the markets. Do I think it's going to hold forever? Absolutely not. I think we're going to melt down as soon as we drop beneath this floorboard at 89 cent. More about that in just a second. And you can also see a bearish spin on this. There's a lot of technicals right now that are extremely bearish. I'll look at the EMA ribbons in just 1 second for this as well. Over on the daily time frame, we talked about this brutal head and shoulders with a price target all the way down here. Once again, 69 cent. There's a lot of confluence down here. There's volume profiles, there's previous data traded, there's this price target of this head and shoulders pattern, and also we have a bear flag pattern down to about 56, which is a little bit lower than the previous one. Volume profiles around about 51. So all in all, this area that we're coming down to, between 89 cent and then 70 cent, there's a good amount of support and touch points in this range. And then down to 70 cent, which is pretty much our take profit, down to about 51 cent, there is a lot of areas where we could definitely find ourselves lollygagging in the immediate short term. But technicals right now are looking extremely bearish, and I still do stand by this, that I think this 69 cent zone down here is going to be an absolute magnet for the price action. And you can also see, if I'm removing this, in the higher time frames, we are still absolutely putting in this lower lows, lower highs, lower lows, lower highs, and I do think that we're probably going to come down to lower lows very soon. And also, of course, another way that you could spin this bullish is for the past month, since the 22nd of November, we've been making higher highs, higher lows, higher highs, higher highs up here. And then it looks like we're trying, it really looks like we're trying to make higher lows while we are sitting in this volume profile area. I personally don't think that we're going to have a move to the upside. And you can also see another slight bullish spin on this. You could definitely argue, hey, we might have just completed a 5 wave. And if you are, very short-term bullish, it is possible that we get an ABC correction above our entry point above 112. I personally don't think it's going to happen. I don't think we have the liquidity conditions to support that type of uptrend. If you do watch my channel, if you do watch my stock market videos, I have 2 videos scheduled where I'm going to be talking about liquidity conditions. But we've been talking about the global liquidity crisis in the stock market, in Bitcoin, and talking about how, in my opinion, well, it's not in my opinion, you look at volume profiles, look at quantity sizes on book depths in liquidity contracts. There is not enough momentum, there's not enough volume in the market. Where is the money going to come from to support this new uptrend? So once again, just pointing out, I am an objective bear. I do like to, say when there's a bullish sign, when there's a bearish sign. Right now, it does look very 50-50, but, you know, looking at things outside of Kadena, looking at the stock market, it looks like all the markets are really getting ready to nuke at this moment in time. Bear flag breakdown, head and shoulders breakdown, but we are also sitting in a volume cluster here at 89 cents. So as soon as we start losing 89 cent, I do think it's going to be smooth sailing all the way down to 69 cent, which is our price target that we've been looking at for quite some time. Now, let's pull up the EMA ribbons because we've got another bearish signal here. There's definitely more bearish signals than bullish signals at this moment in time. Let me just get rid of all those useless ones so we can just see the short-term moving average at the bottom and the long-term moving average at the top. Now, basically, the way we've been trading Kadena, this is a better chart to run this on. Yeah, we'll look at the oscillators in just one second. This is basically how we've been formulating all of our trades on KDA. Now, I don't remember if I shorted at these regions, if I'm completely honest. I do remember shorting here at 140 and 145, but we highlighted these areas many times. We said, hey, as soon as KDA's EMA ribbons started to come into fruition, you can see what happens when we poke our head above the long-term moving average, or, you know, most of the time we just come up and, you know, tag the moving average. You know, most of the time we nuke to the downside. Here you can see every single time that you poke your head above this long-term moving average, you really do get ready to nuke to the downside. You can see from 247 all the way down to about 142, we nuked after having that reversion to the mean. Here, poked our head above long-term moving average, reversion to the mean breakdown, reversion to mean price breakdown, or reversion to mean, mean price, because these are EMA ribbons, which are just, you know, what are these? The 55 moving average and the 21 moving average. These are your mean price in the past 21 and 55 days. You can see over here, reverted above the long-term moving average here, 146, 145. We entered a trade at 140 and 145. Literally came up to 146 and we entered at 145. And of course, this was a hugely profitable trade. If you're part of the Cowboy family for a while, you might have gotten in this trade, and we did make some serious money on that trade. And I still do think that this trade here, where we've poked our head above the EMA ribbons, this is obviously when we entered our short. We entered at 112, price action pushed up to 113. Once again, another extremely close call at the exact top that we were shorting from. And ever since then, as you know, if you've been following this trade has been moving into the profit. And we'll talk about the profit for the trade at this moment in time. We'll talk about my new stop loss. We'll talk about, do I still think we're coming down to this take profit? And, you know, summarizing everything that we've just talked about in this video. But you can also see what I did want to highlight here is if we are looking at the EMA ribbons, we have once again come into the EMA ribbon since our trade at 112. We've broken down, we've lost these, and we've pumped back into them. And quite recently, we came up to 97.5 cent, and it looks like we've got sharply rejected from the floor of these EMA ribbons. And what you can also see is these EMA ribbons, now the price has pushed back up to the short-term moving average. The short-term moving average doesn't have too much further to move down to meet the price action. However, the long-term moving average does. And if you have been watching me for a while, you'll know what I'm getting to at this point. It looks like the EMA ribbons are starting to tighten. Why is this important? EMA ribbons work like Bollinger Bands. As soon as they tighten, like look at the chart. Where have the EMA ribbons been their tightest? They've been the most tight here because obviously they've crossed. That's literally as tight as you can get when they cross. There was a cross here, explosive move up. There was a cross here, explosive move down. So in general, you can see the EMA ribbons were extremely tight here, and there was insane volatility in the market. What can you see from then? Well, they more or less just continued to widen until we came into this point. Price pushed above the short-term moving average, so short-term moving average moved up, but most of the time it was trading beneath the long-term moving average, so long-term moving average moved down. EMA ribbons got extremely tight, and boom, these tightenings of the EMA ribbons are when you witness the most volatility in the market. And right now, if we are kind of going to continue flirting with this 96, 97 cent region, the EMA ribbons are only going to get tighter, and it's going to probably cause another absolute nuke down to our price target, of course, of 69 cent to the downside. So, you know, all in all, like I said, I have highlighted a few signals that could say, hey, we might lollygag at this 89 cent for a region, mainly because of these volume profiles, which is why I'm amending my trade. Or not amending, I'm just making the stop loss false news, so we walk away with new profit. So we walk away with more profit in the worst case scenario. But looking at all these technicals, I mean, we're getting confirmed bear flag breakdowns. We've already got that confirmed head and shoulders breakdown. KDA BTC looks like it's finally getting ready to melt through the floorboards. And you know, I've been talking. If you just watch my KDA videos, you probably don't witness. Well, of course you don't witness. You don't witness me talking about things like the total crypto, the total 2, which is the altcoin market cap, and we've been highlighting in some of my most recent videos how the total 2 has come up to the June lows. So, you know, Bitcoin was around about 17,600 at this point. Altcoins were at a collective market cap of 474 billion. We created some bearish distribution pattern. We broke beneath the floorboards and we retested the June lows as resistance. And ever since then, we're starting to head down. So in my opinion, altcoins are heading down to the 786 Fibonacci. They're about another 10.5% away. And once again, we've talked about this in the channel. When you do lose the 786 Fibonacci in a bear market, these are when the major meltdowns happen. So looking at KDA BTC, going back to this chart, this is super important because KDA is coming down to its last line in the sand at the May lows. And it looks like we're going to be getting ready for a nasty move to the downside. We talked about this a little while ago. We've had a slight breakdown, slight pump, but more or less nothing's changed. I think Kadena's got about another 30% to drop down against Bitcoin. And considering I think Bitcoin is going to break down, I believe we're going down to 14,000, at least in the immediate short term. Oh, this is why this bear market chart doesn't work anymore. It's because FTX has shut down. I'm going to need to move my DCA plan onto a new chart. Thanks, Sam Bankman-Fried, scumbag, making me amend my charts. But coming down to 14,000, I see Bitcoin dropping about 17%, which, you know, do the maths, around about 60%, 57% if you really want it so accurate. But I do see Kadena from this point at this moment in time at least dropping another 57%. To come into contact with where I think Bitcoin's going down to. So this is probably going to mean about a 40-cent KDA. Please do bear in mind, I'm not saying this is going to happen this week. I'm not saying this is going to happen this month. I do think this is probably going to be one of the bear market targets that I think is going to come into fruition in Q1, Q2, maybe even Q3. I'm not saying we're going to be here in a month or 2 months. It's really probably going to be one of my last price targets for KDA. As you know, on this channel, we like to take things one step at a time. And right now, 69 cent is really the only price target that I've got on my mind. Anything beneath that, we will reanalyze the markets and let you know what is going on. So, reversion to the mean looks like it's been complete. On the 1 hour time frame, 1 hour time frame has flipped long. 4 hour time frame, we actually beautifully poked our head above the long-term moving average. We poked our head above here and broke down. We poked our head above here and broke down. We poked our head above it here and broke down. And since then, you know, the EMA ribbons have started to kind of flip bearish. So there's a lot of technicals saying that we should be continuing to break to the downside. And while there are a few, like that Elliott Wave that we discussed, and also, you know, talking about the fact that we're sitting in the 89 cent, there's not enough liquidity. I mean, let me show you quickly. This is the book depth for the E-mini futures in the S&P 500. That sounds like a mouthful. If you want to learn the fundamentals about it, I've talked about how to use this in my educational playlist, so I won't discuss the fundamentals of this too much. If you want to learn, it is here, how to trade with CME liquidity tool. All you really need to know is this visualizes liquidity. In other words, it visualizes the amount of volume coming in the market. In other words, blue line, which is mid-price, goes up and comes into this mean trend line. You can see boom, 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 boom. It just means volume's overextended. Too much volume's come in the market, and when there's so much volume coming in the market, there's only so much more that can come in. And when you're looking at the mid-price, I mean, when you're looking at the contracts, the quantity sizes, they're still at super elevated levels. I mean, we've got about 41.4 contracts for sells, about 40.9 contracts for buys, or bids and asks. So all in all, the amount of contracts that have flown into the muni futures and the amount of liquidity that's come into the markets quite recently is very, very strong. And, you know, whether you're looking at, you know, Bitcoin, whether you're looking at KDA, whether you're looking at the stock market, all in all, you know, you can see how these extensions, these tops in liquidity conditions for the E-mini futures and the S&P 500 affect the stock market. And then you compare this to something like Bitcoin, or let's compare it to KDA to make it simple. KDA, let's put this on a new pane. Okay, it's fine. You can see what happens over here. So look, liquidity conditions top out for the S&P 500, top for KDA. Liquidity conditions top out for the S&P 500. doesn't quite correlate to the top for KDA, but we don't have any more upwards momentum. We just kind of bleed out and slowly chop to the side. What happens over here when liquidity contracts topped out, or liquidity conditions rather topped out for the E-mini futures in the S&P 500, that was more or less the top, and we started rolling back down to the downside. It's kind of hard to see over on this chart. This was on the 1st of December, and when we are looking at the price for KDA at this moment in time, where was the 1st of December? 1st of December was right here. So on the 1st of December, we managed to come up to $1.09. Where did we top out in terms of the price action? $1.13. So you can really see how important looking at these liquidity conditions for the greater markets affect the greater markets. So with this liquidity conditions for the stock market topped out, I really don't think there's any way that KDA will be having that bounce that we did talk about in the bullish situation. Of course, I'm still leaning very bearish. Now, let's look at the oscillators. The oscillators are still mostly bearish at this moment in time. The squeeze momentum indicator is ticking into light red, and you can see the last time it ticked into light red was over here. Price action was at $1.19, and we broke down to about 78 cents. So squeeze momentum indicator is really like a higher time frame indicator. Although we are looking at it on the daily, the amount of momentum that needs to come to swing this up and down requires, far more movement in price action compared to something like your MFIs and your stochastic RSI. So squeeze momentum indicator right now is really saying that this downtrend has only just started. When you're comparing this with the volume profiles, it's saying yes, the downtrend started, but we might just lollygag at this 89 cent for a couple of days, maybe a week, before we do of course come down to our 69 cent price target, which is of course our take profit. If we get rid of the squeeze momentum indicator, you can see a slightly different story over on the stochastic RSI. Stochastic looks like it wants to turn up, and the last time we did this, you can see we had a sizable move to the upside. So this doesn't necessarily mean that we're going to push up into new highs. In fact, a lot of the time you can see the stochastic flips bullish over here. And how much did price move up? Maybe about 16% or so, not a crazy move. A lot of the time when the stochastic flips up here as well, this was a really weak move. We only managed to move up about 5%. This correlated to this double top over here. So, stochastic, it might turn up. We might have a little bit of a baby bounce. And more or less, the stochastic is still going to continue pushing up if we just stay around this short-term moving average. So there's two scenarios that I see playing out for KDA. Either we've already topped out at 99 cent and we're going to start nuking to the downside to our 69 cent price target, or because we are in this area where there's volume profiles built beneath us, it is very likely that we push up again into the short-term moving average, maybe chill around $1. I don't see us pushing up to the long-term moving average around about $1.05, $1.4.9. I think it's quite likely, though, that we do chop around in this range, whether we chop around just beneath at 93 cent, which we're at right now, or whether we chop around at 97 cent. It doesn't really make a big difference. I don't have a crystal ball, of course. I'm just looking at the most probable scenario. But either way, we've either topped out and we're going to continue to break down, or we lollygag here, we chop to the side for a bit, short-term moving average stays stagnant, long-term moving average moves down, and this of course is going to correlate to the next major tightening in the EMA ribbons, which will cause that final meltdown to that 69 cent price target. Now, if we're looking at the MFI as well, MFI very 50-50 right now. It looks like it wants to turn up a little bit, and this can continue to turn up while we are beneath the EMA ribbons, because of course, the majority of the markets are trying to push us down right now. If liquidity contracts start coming into KDA and we do lollygag around about this 97-98 cent region, then we could definitely see a dead cat bounce back up to the heart line for the MFI. So the oscillators, maybe the oscillators are moving more bullish at this moment in time, but all in general, looking at liquidity conditions, looking at the greater markets, looking at what Bitcoin's doing, looking at what the altcoin markets are doing, we've got bearish signals playing out, reversions to the mean on the EMA ribbons, we've got bear flags, we've got head and shoulders patterns, and all in all, we have just had a nasty drop down to this volume profile. So it is a possibility that we do chill at 89 cent for a short period of time, but all in all, I am 100% leaning bearish. But because we are seeing a few semi-bullish technical signals at this moment in time. I do just want to move my stop loss down. As I said, I am going to be away from the markets for the next week. Today, a little bit later on today, I'm going to be traveling to London to fight in a kendo dojo, and then on the rest of Tuesday, Wednesday, Thursday, and Friday morning, I'm going to be in London with friends. Friday evening, I've got dinner plans, and then Saturday, I will be back to you to reanalyze the markets, look at KDA, look at what's happened while I've been gone. But this is my prediction on what happens. We either continue breaking down to my take profit, or we lollygag at 89, 90, 95 cent for a couple more days, tightening these EMA ribbons and getting ready for that next major meltdown. Either way, I 100% lean bearish. I don't really see the scenario that we push up and have, you know, something like, you know, this was your 5 wave and then a new A, B, C. I don't think that's going to happen. I don't think we have liquidity in the markets to, you know, kind of support that type of move. But nonetheless, just to be safe, as you know, I am a conservative trader and I am going to be away for 5 days. I am going to be moving my stop loss down. Now, we originally had our stop loss just at the long-term moving average at $1.09, meaning, you know, if we did come up and wipe us out, we were going to walk away with at least a 9% profit. However, since then, the short-term moving average has started, or sorry, the long-term moving average has started to move down, and you can see my new stop loss is actually here at $1.05 on the dot. Now, this doesn't correlate with, well, you can actually argue, hey, it does correlate to these candle body closes here, but I haven't got it here for that reason. In my opinion, the new top of the range in this trading data is going to be right here at $1.04.6, and also here $1.03.5, and here as well $1.18. And I do know how these markets work. Market makers love to grab liquidity from people who have their stop losses too low. So it is possible, you know, while I don't think it's going to happen, that we could do something like this, come up to these areas, wipe out people that had their stops here, and maybe even wipe out people that have their stops where the long-term moving average is by time that we do come up to that level. But all in all, my new stop loss is going to be here at $1.05, just above the long-term moving average, just above these ranges, just above these touch points, just above these candle body closes, and also, you know, where these candle body closes were established over here, which means, worst case scenario, if the price does pump when I am away, that we're still going to be walking away with, this is going to be a 6.34% drop from our 3x entry, and of course 3 times 6.4% is going to be a 19.2% profit. So basically, worst case scenario, I walk away from these charts for 5 days. I was wrong about the analysis. The market's going on an absolute run to the upside. We're still going to be walking away with 19.2% profit. And if that does happen, that's just going to provide us another great opportunity to look for a new short. Do I think that's going to happen? No, but I'm a conservative trader, and making sure I never lose money on a trade and making sure my trades are as profitable as possible is something that I truly do care about, especially when I've got, you know, 8.4 thousand people watching my videos. It's very important to make sure that every single trade I make absolutely get stopped out in the profit. Of course, worst case scenario, I've never made a trade on YouTube that hasn't worked out so far. Doesn't mean it will always be this way, but this is why we're cautious. New stop loss, $1.05. Do I still think we're breaking down to 69 cents? Absolutely. I do think we're going to be down here relatively soon. That's all I've got for you for this video. We're still about another 27% away from my price target. We have actually dropped 22% since my most recent video, and if you are in my trade, we're down 16.45%, which means 16.45%. I'm ill right now, so I really don't want to do maths in my head if you couldn't already tell. I think I said at the start of the video. Like I said, I'm low-key dying right now, so I'm just doing my best. But, you know, if you are in this trade, even after this bounce from 88 cent up to 93 cent, this trade is still in 50% profit. So congratulations to the Cowboy family if you are in this trade. It's definitely looking very profitable. And of course, I do still think that we are coming down to our 69 cent price target. That's all I've got for you for this video, my friends. I look forward to touching base with you when I am back in the next 5 days. And also, before I do wrap up this video, if I do see any important charts, any important data, any economic data, which there's not any economic data coming out, if I see anything good to post about while I am away from my PC, I will be posting it in my Twitter and my Discord. So be sure to come over to my Twitter. It is here at 618_cowboy. And if you do want to come and join the Discord, head over to my YouTube page, click on the About, and you can see my official links, my Twitter, Discord, Instagram, and official merch is down below. I also have the invite to the Discord in all of the descriptions of my videos. So For now, cowboys, that's all I've got for you. As always, if you do appreciate the content, make sure to let me know by leaving a like and a comment down below. Share the videos with your friends. It's been your boy Cowboy Trades. See you in a week. Peace.